financial statements are fictional, and that the parabolic growth that we've seen in Enphase's revenues is not indeed real as we had suspected.
Oh baby, do we have a hot stock we're breaking down today? Ladies and gentlemen, you might be aware that the natural energy segment is one of the fastest growing sectors in the stock market, and as investors, we need to be able to recognize these future trends if we ever expect to make large capital gains, obviously placing our bets accordingly, in which I have done so with two companies in this sector. Obviously, putting electric vehicles aside, Tesla is heavily involved in solar roofs and their power walls, more or less for individuals. And my second investment in this space is a company you might be aware of called Northland Power, which essentially is a utility that deals with large-scale wind and solar to power economies over individual residential. But expanding my mind beyond just these companies in this fast-emerging market, there is one company that I want to focus on today called Enphase that has recently just been exploding in sales and revenue here, currently up by 135% year to date, with only really one competitor in the space as well that is publicly traded called Solaredge Technologies. And these companies only focus on doing primarily just residential solar and the same thing as Tesla, power walls, but clearly showing some major signs of success that is causing a lot of controversy on how legit these companies' numbers really are. So we're going to be breaking all of that down in this video. So if you enjoy my transparency, I simply ask in return that you slap that like button. But nonetheless, let's jump right into this. Welcome back, passive income investors alike, to the breakdown of Enphase Energy, a brand new company that I've only recently become aware of because of the explosive growth they have been experiencing, which are basically a direct competitor to Tesla's solar panels and their power walls, as they offer same solutions. But I think this is a company that is primarily focused around one product, which is their micro inverters, in which they built an entire infrastructure around that one product, which is essentially what takes the power from the solar panels and puts them into the batteries and allows you to convert all of that to usable energy here, folks. And we can see that their product listings for those solar panels, we can see it for their inverters. And obviously, as time moves forward, many people are aware that solar panels are getting cheaper and cheaper, and they almost work like Lego blocks, where you can basically buy them as you can afford them and simply plug them into a system that you may already have set up. So Enphase Solar and Storage claims that they're the only all-in-one system for seamline and automatic power backup. I can't presume that they're the only system, considering of all the competitors that are coming up, but that's something nice to throw on the website as well, isn't it? Now, these are some pretty blowout numbers we are about to go through. In fact, they are so blowout that there are investors shorting the crap out of this company because they're claiming that these numbers are actually fraudulent, and we're going to take a listen to those claims after we just analyze these numbers really quick. Now, these numbers are for Q1 of 2020. In fact, they are releasing their earnings report at the close of today's bell. So by the time this video is posted, you can actually go check out their recent numbers, which something tells me are going to be just as explosive. In this Q1 of 2020, their net revenues were $205 million against Q1 of 2019 when they only did $100 million, with gross profit of about $124 million, which was pretty much over double for what they did in the year prior here, guys. And if we scroll down, the other really interesting fact about this is, many of you know, I like comparing assets to liabilities because this really helps us understand the underlying aspect of the business. And we can see the total assets for this company are sitting around $1.03 billion. And if we scroll down and just take a look at their total current liabilities of only $233 million, this is arguably one of the best capitalized companies in the growing natural energy segment here, folks. So what I would like to do really quickly is just listen to some of the controversies and claims made against this company as they ship most of their accounting to India. They're saying that they're lying about the bottom line numbers.
At the end of last year, we got a tip that Enphase had offshored key elements of its finance and accounting functions to India. We thought that that was extremely peculiar for a $7 to $10 billion company. So we hired a third-party, global, reputable private investigative firm to go interview former employees at their India base. And indeed, almost all of the India employees that we interviewed believe that the company's financial statements are fictional, and that the parabolic growth that we've seen in Enphase's revenues is not indeed real as we had suspected.
Yeah, what is their explanation for the offshoring? We reached out to the company, no comment right now.
I have no idea, but I'd be interested to hear. We ballparked at about 39% of the company's U.S.-based revenues, which are the lion's share of the company's revenues, are indeed not real.
There's been a few analysts who have pushed back on this, other reports that have said the company's numbers can be explained. JP Morgan in a report said that investors can view the cash generation as an indication of true business trends. So how is there such a difference between what you're seeing and what the peers are saying?
They should rebut our analysis. They should show the market how we are wrong.
How long can they go, basically? At what point does this have to, will it catch up to them, in your mind?
Yes, of course. As you see, the target price in our research paper says delisted. We expect for this company to eventually be delisted. We expect it to meet the same fate that Celadon Group did meet, and that means regulatory investigations, a board of director, an internal investigation by the board of directors, and we believe that the auditor needs to reassess their blessing of this company's audited financials over the previous couple of years.
Now, these are some insanely bold claims, which literally, if come to be proven true, will delist this stock from the market. Now, these claims are only coming about of people trying to understand how they are having such explosive revenue, and all we can really do right now is compare it to the closest competitor, in which we can see with Solaredge. So getting into Solaredge's numbers, we just got super fortunate because as the editing of this video, we just got the Q2 2020 release for the earnings of Enphase. So we're going to be able to do a more accurate side-by-side comparison just to see what the competition looks like here. And for Q2 of 2020 with Solaredge, they did a revenue of $331 million with a gross profit of $102 million, giving them a margin of 31%, which is pretty incredible considering the economic circumstances we have experienced over the last quarter. And considering in Q2 of 2019, they only did $325 million in sales, they are actually still doing better in this economic crisis than they were last year of the same quarter. And if we scroll down, we can also see how many items they've shipped, which are increasing pretty drastically, considering in 2019 they shipped 5,618 total products, whereas in 2020, year to date alone, they've done 3,200. So there is some real metrics behind growth here, which the largest segments obviously being North America and Europe. Now, getting into Enphase's most recent numbers, which again, luckily just came out this very moment, with a net revenue for 2020 of only $125 million against 2019, where they did $134 million. So this company already in the first 3 months of this crisis is experiencing a further downfall than something like Solaredge is. And if we take a look at the 6-month growth, we can see for 2020, they did roughly $331 million against 2019, where they did $234 million. So they are growing over a 6-month basis, but not by a quarter-over-quarter basis, which can also be a little bit of a red flag here comparing them to their competition. And the only reason I say it's a little bit of a red flag is if we take a look at Solaredge, it trades at a current market cap of $9.8 billion, in which Enphase trades at an $8.6 billion. Those are pretty close market caps considering how much better so far Solaredge is doing. And scrolling down, just to go through what we just looked at before these earnings came out, was the assets versus liabilities, in which they've actually decreased slightly. As of June 30th, 2020, their total assets are only $997 million, and they are obviously going to try and make it look like it's increased because from December 31st of 2019, when they only had $713 million, but if we only just skip back to the quarter prior, literally in the earnings we just looked over, we can see that for March 31st of 2020, they had a total asset of $1 billion. So we are seeing a decrease in the overall business. And the only good thing about that is if we go to the total liabilities, their current total liabilities, they only have $223 million, which actually decreased slightly by roughly just about $10 million, which really can't equate to the downside of their total assets, because we can see that their total assets have dropped by almost $40 million. So there is something going on here which could probably be directly related to the economic circumstances. Now, to come to a quick valuation standpoint to figure out what one of these companies would be the better buy, we can take a look at Solaredge's total assets that sit roughly at $1.6 billion. And if we scroll down, we can see their total current liabilities are about $405 million. So they would have a total underlying asset clearly sitting at around $1.2 billion, and which can't even be as closely compared as Enphase with only $997 million million. Again, minusing those total current liabilities of 223 million. They're only sitting on what, 700 to 800 million in underlying assets. So there is a drastic difference between these two stocks based on their earnings and their underlying asset value. And with Solaredge having 331 million, toppling by almost threefold over the net revenue of Enphase at 125 million, it doesn't make sense for these market caps to be trading so close together. Because again, guys, Enphase is at 8.6 billion and Solaredge is only at 9.8 billion dollars. So if I had to pick one of the two, I'm definitely picking Solaredge. But again, is Enphase lying about these numbers? We do not know. Now, if you are interested in this segment, I'm going to recommend that you approach it with extreme caution, guys, because any company that is actually popular, that has a stable moat, is priced at extreme valuations. Because even Northland Power for utility is sitting at some pretty absurd highs. Obviously, we could say the same thing about Tesla being up 530% in 1 year. These are just not stocks I could even see myself buying at these current valuations, which is why I love looking at these new emerging stocks that have explosive growth rates, which are likely to give you a better return, but at the same time, they come with all these additive risks of not being in the market for very long and not having a fully proven business model yet. We're going to have to sit down and find out what happens. But if you subscribe to this channel, I'm more than confident I will be updating you guys in the future. So I'd love to know what you think about these companies in that comment section below. Let me know if there's some that I missed, because I love analyzing through them. But nonetheless, stay cool, stay awesome, and I look forward to catching you guys tomorrow.